So yeah, good evening to everyone. Welcome to FAC 3764. So tonight we want to cover that assessment, but just one part of it. So it won't take long because I'm going to leave most of the time to you guys to complete that assessment. So during our time, at least it's time for you to sit down and do that assessment at our time, not at your own time. All right. So remember, so far we have covered the conceptual framework, even though we are yet to revisit that one and do an exercise or more exercises on the conceptual framework. Remember, that was the first topic that we did. And then we moved on to deferred tax. But I have not got any assessment on deferred tax yet from you guys. And then we got on to revenue, right, which is IFRS 15. So basically we can say with IFRS 15, maybe there's a topic that I'll need to teach you guys before we call it off. Contract costs, right? Contract costs. And then we jump onto leases, okay? And then we jump onto leases. But today I wanted us to at least do that that assessment. So I just want to guide you guys on what I did on the solutions and how I arrived on those solutions. And then you guys, you need to personalize that solution. Like really personalize, like really customize, make it your own. Okay. So there is the information. I sent this on the group in the morning. And I think all of you had posted this prior anyway. So there is the required. The required is saying discuss the correct recognition, right? And measurement of transactions 1.1 and transaction 1.2 in the accounting records of DD Armor Limited for the period ended 30 June 2022 in terms of IFRS 15 contracts with customers. The discussion must be supported with calculations. Right. Then number B was discuss the accounting recognition and measurement and ethical consideration of transaction 1.3. So I did not do 1.2, I just did 1.1. I didn't do everything for everyone. So the assessment one is saying question one. DD Armor Limited is situated in Gauteng, South Africa, and specializes in the manufacture and sale of armored vehicles. The armored vehicles are sold in South Africa and internationally. The company has a financial year ending on 30 June. DD Armor Limited offered customers the option to purchase a standard armored vehicle, or if they prefer, the armored vehicle can be made specific to their requirements. Custom-made armored vehicles take 9 months to manufacture and deliver. All right. All vehicles, whether custom-made or standard, must be serviced every 15,000 kilometers. South African customers have the option to purchase the armored vehicle with a 20,000 service plan, right? A service plan normally sells for this much, right? Normally. So that means they offer this on a regular basis, normally, okay? Right, an armored vehicle without a service plan option is sold for 970. Okay. Then they are saying the following information relates to revenue transactions of DT Armor Limited during the current financial year. On August 2021, so already something is affected. Timeline. Your year ends on 30 June. Right, and then they're already saying on what? 1 August 2001. So that means this is 2022. So that means your year starts when? 1 July 2021. That's your timeline. That's your timeline, right? So this is within the current year. Right, DT Armor signed a contract with S4G Limited, a South African security company, for the purchase of 10 armored vehicles at 985 per vehicle, including the what? 120-kilometer service plan option. So there's an option of 120. So they purchased this. So that means this is now a separate performance obligation. Okay, it's now a separate performance obligation. Because why? Why? Because once someone buys the car, you need to service their vehicle. So that's another obligation. That's another promise to the client. So now what is the value of that promise within the purchase price? Or within the transaction price? And this is 985 per vehicle, not total. You bought 10. So the math there. Right, the contract requires S4G Limited to pay the purchase price in cash. So there's bank involved on the date of delivery, right, of the vehicles. S4G took legal ownership of 10 vehicles on 1 November 2021. All right. And the total purchase price was also paid on this date. All 10 vehicles underwent the 15,000-kilometer service during the current year. So that means we can recognize a portion, right, of revenue that has been allocated to this. We can't recognize the full 120 because we need to service this over time. So that means from what we're going to allocate from the transaction price to the service plan, we can recognize a portion equal to 15,000 kilometers. Is that making sense to us?
Yep. Yes.
Right. During the current financial, okay, we're done. So we stopped there today. That's the reason I think I'm tired today, not myself. But the work is done. So from this part, okay, I then gave the guidelines. So this is my brain, it's not yours, it's mine. So customize. Right, so I had to start somewhere, right? Because already there was a contract, so they want the recognition, okay? So that's why I went on to say, so this was based on IFRS 22, right? To say at contract inception, DT Armor shall assess the goods or services promised, right? So you're assessing the goods that you've promised. One, you've promised a service, you've promised a vehicle. So that means what you've promised in the contract with S4G and identify as a performance obligation each promise to transfer to them, right? So you're identifying to say from what you've promised, which ones are the performance obligations. because you are saying once I fulfill those performance obligations, I can recognize revenue, right? In proportion to what I've done. Right, DD Armor has a performance obligation to deliver. So that's the performance obligation. You need to deliver 10 armored vehicles together with a service plan option of 120 kilometers. That is the performance obligation. Right, then I just went on here to then give the details of if these performance obligations are separate or not. Are they separate or are they one? Do you treat them as one thing? Meaning to say that if I deliver the car, can I then recognize revenue equal to 985 in total? No, because within the amount, within the amount of this charge, there is the vehicle, which is the good. And then there's also the service there. All right. So within, you need to split this amount. So here you are going to recognize a full portion equivalent to the good because the cars are delivered. But what about this other obligation? You can only recognize it over time. So once you service for 15,000 kilometers, you recognize revenue equivalent to that. Next time, another. Next time, until you complete, until you reach 120. Then you can recognize revenue equivalent to the what? To the service in full. I hope it makes sense what I'm saying.
It does.
Ah, thank you. That means I've taught you well then. Right. Then here, I just say it here, the armored vehicles are distinct as SG can benefit from from them, right? So English here, right? From them on their own, or can benefit from the vehicles, right? On their own or together with other resources available, like the optional what? Service plan, right? The service plan is also distinct as S4G Limited can also benefit from it on its own as DD Armor Limited after its, what happened here? My typists. Let me go back to the drawing board. Right, DD Armor does not, okay, on its own as DD Armor after it without. Right, right, as DD Armor offers it without the vehicle purchase. Offer. So it's supposed to be an F and then O here. There, correct that part. Offer. Right. So don't copy. I'm just guiding you so that everything makes sense. So I'm explaining. Right. DD Armor does not provide a significant service of integrating the vehicle and the service plan. Or does it, or does the service plan highly, or is the service plan highly interdependent, right? Interdependent, or is highly dependent on the vehicle and it does not significantly modify or customize the vehicle. Right, the vehicle and the service plan will be recognized as a separate performance obligation. Done. So you remember the steps. Well, I'm saying step, remember the first one is identify the contract. Number 2 is what? Identify the performance obligation. Number 3 is the transaction price. So transaction price here, we're not dealing with transaction price. If you go back to your notes that I gave you or your study guides, the steps are there. You remember the 5 steps. I'm just following them. So for me to write step one, it's just those. So you can write the names as you go. That's your own message. But I've told you that so many times.
Yeah.
So note that down. So that you don't just write step 3 because it won't make sense. Right. DT AMA. So here we're not talking about the transaction price. DT AMA will have to determine the consideration it is entitled to in exchange for transferring the vehicles and the service plan. Right. Then we are saying S4G ordered 10 armored vehicles at 8,985 each. So just right, come and say each. Right. Therefore, for 10, it will be that much. So there's no easier homework than this because you already have this. Now it's up to you to type or write whatever. So I'll give you that time today.
I see where I missed it.
Wow, you're attempting. Nice. Right. Now, step 4 is allocation of this transaction price. Now we are allocating. That's step 4 of revenue. And today, CTA was writing revenue. And you remember there was a class where we did together with CTA. There's no difference. If you don't catch up now, and you say you do that in CTA, CTA is more pressure because there's a lot of things to do. So make sure you understand revenue now. So that next year, if you want to pay CTA, you are just revising, not starting afresh. I'm just reminding you, it's like a revision session. All right. They are saying now here, the transaction price should be allocated to each performance in an amount that depletes, right? Or in other words, that matches, right? The amount of consideration to which DT AMA expects in exchange for transferring the vehicles together with the service plan to S4G Limited. So you see, I'm applying, that's why I'm giving the names. I'm not just saying customer, because that will be generalizing, because you're applying, all right? And then this will be achieved by allocating the transaction price to each performance obligation in the contract on the relative standalone selling price. I told you this. That when you're now allocating that transaction price, because you are receiving one amount, but within that amount, there are performance obligations. There are 2 of them. So you can't just say, once I'm given the money as a company, then I'm recognizing revenue now. No, there's a portion that you can't recognize, because from within that amount that you have already received, there's an element of the promise that you have not yet fulfilled in full, which is the service plan. So now, how to determine the amount that should be allocated to the service plan that we are going to recognize over time? Right, so transaction price, so I did based on each. So you can use based on total. You can not just say times 10, then you get the 9 million something. It's up to you there. Then standalone selling price, right? So this one will be now based on the what? On the 10 cars. So just multiply this by 10. Everything will be by 10. Because even the service plan is for the 10 cars. So 37,500 is for 1 car. So you can multiply by 10 on the side. It's up to you. Okay. And then you get the total amount, right? When you aggregate them. So you're aggregating this and this, not that one. That one is just for this transaction price. But now for the, because you want to proportion. So you proportion using this plus this, you get this. So I didn't say this plus this equals this. No, it's these 2 only.
Oh, you know where I lost it, Jeff? 970. I said 985 minus 35. And then the vehicle is 945. I lost it there.
You see? So when I explain, I know how students think.
Too much.
That's why I'm explaining on that part. I'm saying it's not that one.
So that 970 actually is given. I mean, I took this one 985
Okay.
and I
Yes.
less that service plan and it's 947,500. And on top they said actually the amount sold is 970 is where maybe I was confused.
Oh, you're confused, but thank you for attempting. Wow, I'm impressed. Thank you for attempting. Yeah, so okay, so that is the total. Right, so now we're allocating. This is me allocating, right? So you can allocate anyhow. You don't have to use this table. Okay, I've seen that sometimes they use percentages, right? Sometimes they say this divided by this, multiplied by what? By 100. Then they write this as a percentage. Okay, then they say this divided by that, multiplied by 100. They don't use this amount. Then they get the proportion. You understand? You can do that as well. Then once you get the percentage, you multiply that into that, you then get the, so you can add an extra column here. Then that percentage multiplied by 9, that. Also here, whatever you get here, multiplied by. Okay, that's how you can write that. Okay, it's up to you. However, just research on how you can make this different. So the vehicle is this amount divided by the total. You see, that is the reason why you are adding this and that. So you get the total, and then you divide into the transaction price. So the value of the vehicle within the transaction price will be worth this much. The value of the service plan within the transaction price will be worth this much. Add these together, you get that same amount. Right. Then step 5 is now you are saying it is the, when do you recognize revenue? You recognize revenue at a point in time or over time. So according to the contract, we're recognizing these guys, sorry, we were recognizing revenue at a point in time for the vehicles because we were saying as soon as we deliver, we want our money. So at a certain point in time, we can recognize revenue, right, for the vehicles. But for the service plan, we recognize it over time. So as we service the cars, we recognize revenue equivalent to kilometers, 15,000 kilometers. As we service the cars, next time they come back, we recognize revenue until we exhaust the 120 kilometers. So you are recognizing revenue over time, not at a point in time. Right. DD Armour will recognize revenue relating to the vehicle at a point in time when DD Armour delivers the 10 vehicles. Okay, you see what I did? That multiplied by 10, not this amount. DD Armour will recognize revenue relating to the service plan over time, right, as the vehicles are serviced every 15 kilometers, right? Then you say every 15 kilometers of the 120. You can write there, up to you, add on, right? As it is mentioned that all 10 vehicles underwent, maybe this English wording is wrong here, right? Underwent the 15,000 kilometers service during the current financial year. DD will recognize revenue based on the 15,000 kilometers for the 10 vehicles. So we are now saying this is what we are expecting to recognize per vehicle. Then 15,000 you can write kilometers there, so that it makes sense. Right, 15,000 kilometers there over the 120 kilometers divided into that. So that means of that amount, we are recognizing 4,583. So the next time they come back, we recognize another. The next time they come back, another, until we get to 120. So it's 10 vehicles, multiply by that. So the company can recognize 45,000 relating to the. Okay. So someone can then, you can then go on here and say, right, from the money or from the amount, because remember, this guy is paid in cash. So you say from the amount received, all right, just listen. Amount received by the company, right, by DD, right, the amount relating to revenue will be, then you come and add this amount plus this amount. You add them together. That is the revenue that should be recognized in the statement of profit and loss.
No. Okay. That was.
Then you are done.
Okay. No, I saw my mistakes. Only 1, 2.
Hey, but you pushed then. You pushed. So these are the similar questions, but in an exam, they'll be shorter, very short, because what you should know when you're approaching an exam, don't ever think that, oh, you guys are not writing an exam. Sorry. Forget what I wanted to say. All right. So in a test, let's say a test. In a test, right, if they're going to allocate 1 hour, 30 minutes, that means the question that they're going to give you is enough to cover 1 hour, 30 minutes. They won't give you such long questions. Unless they know that it is pretty easy, straightforward. And remember, this is just a portion of the other topics. So we've already done deferred tax, we have done conceptual framework, we've just done revenue. So they will ask maybe a portion of each. But just what's important to revenue, understand the principle of revenue. When do you recognize? That's what they're trying to teach you. When do you recognize revenue? And if they're separate performance obligations, how do I allocate those amounts? Standalone selling price. Of course, revenue has so many factors, but that is the core. Then the other you will just add on as we come across questions. When is our test?
Yeah.
Sometime in May.
29 May.
Yeah, sometime in May.
29 May.
29 May. So you see, within 29 May, there are so many topics that they expect you to have covered. And lists are long. My list is your kitchen. Because there's a funny disclosure that they want. There's between a lessor, lessee. There's operating. So there's so much. So we need to move. We need to move. So in revenue, I will maybe leave it here. I'm a contract cost. I'm not releasing them undergrad. A postgrad, yes, but undergrad, no. So I can maybe leave them for now because mostly they like to ask on standalone selling price, discounts, and the theory of performance. That's what they like to ask you, unless they want to be silly. But we'll do questions and we'll try and be on the lookout for whatever assessments they send that relate to revenue. Then we'll try and address those things. Because those are the things that they should be asking you. They shouldn't just catch you by surprise. Why are they doing that? But UNISA is UNISA. But the problem is, unless tomorrow, maybe we can meet tomorrow and maybe complete revenue, I can teach you contract costs, right? Contract costs and consignment sales. Yeah. Maybe I can do that maybe tomorrow, because I don't think CTA is meeting tomorrow. I think they'll be on a break just for tomorrow. Yeah, so but I'll see. Let me think about it. So that was that. Then I did not do question 2 because it also needs time. I need to think about what they are saying before I give you the final solution. But for now, go and do 1.1. Then 1.2 was straightforward for me because there was auditing involved. So right, let's do that. Then 1.3. Securico Limited placed an order for a custom manufactured armor vehicle on 1 May 2022 to secure a vehicle. Okay, to secure a vehicle, Securico Limited paid a refundable deposit of 550 on 15 June 2022. Here, I'm not yet sure, but that was my assumption, but I'll confirm, right, through further discussion. But for now, just put it in a pause so that I get the correct thing. But what I wrote is what I thought. Right, on 30 June 2022, the contract for the manufacture of the custom has not yet been signed. So that's why I thought there's no contract at the moment. Right, as the final design has not yet been approved. So no contract, someone is paid at a reasonable amount. All right, in order to boost, yeah, now this is now auditing. In order to boost the revenue figures of DD, right, for the current financial year, the CFO, a registered audit, CA, right? So as long as you're a CA, what governs you? It's SICA. It's SICA. For those that are doing auditing, you remember when we did the ethical requirements, 5 fundamental principles: integrity, objectivity, confidentiality, professional behavior, competence, and due care. Right, that's what they're addressing. So as long as you're a professional, right, in the accounting sector, you are registered or a CA, you need to comply with the requirements of the SICA. Right. So has requested that the accountant to recognize deposit revenue
Imagine.
as revenue from contracts with customer. How can you do that if you're a CA?
Unethical.
Right. So this is unethical because as you are a CA, you are expected to comply with the requirements of what? Of SICA. And SICA expects someone to exercise integrity. So integrity is being honest, truthful, straightforward. That is integrity. And not being associated with any information that is misleading. So you are actually misleading the shareholders or the third parties to think that this company has so much revenue when you are including things that don't qualify as revenue yet. So you are overstating revenue. That is so unethical. You're done. I've explained, you've heard, go and write.
That 3 I got it.
Anything from me?